As of right now, RZLV, trading under the ticker RZLV, is sitting at $2.84 per share, marking a solid intraday climb of 6.37% so far in today's session. While a 6% jump might look like a standard green day for a high-growth tech play, the reality behind this movement is far more complex than a simple price spike. Most investors looking at RZLV right now are expecting a standard rebound after the recent bout of volatility that saw the stock swinging between $2 and $4 over the last few months. They see the name, they see the word AI, and they assume it follows the same trajectory as Nvidia stock or other massive hardware players. But the reality is that RZLV isn't selling chips or servers. They are selling the glue that connects mobile commerce to artificial intelligence. That is a completely different beast, and today's price action suggests that institutional eyes are finally starting to look past the hype and into the actual mechanics of how this company captures value. The common belief holding back retail sentiment lately is that RZLV is just another small cap trying to catch a ride on the coattails of the larger trend. People look at their portfolio on the Robinhood app or through their SoFi Invest account and see RZLV as a speculative gamble because it doesn't have the decades of history you find with something like Apple stock or the stability of a diversified fund in Schwab Intelligent Portfolios. However, the expectation that this is a Me Too company is precisely where the market might be getting it wrong. The deeper reality is that RZLV has spent a significant amount of time building a proprietary mobile engagement platform that doesn't just display ads, but actually facilitates a closed loop of discovery and purchase. When you look at the volume today, it's not just retail traders on Reddit causing this. We are seeing sustained blocks of buying that suggest professional desks are starting to build positions, perhaps seeing the current sub $3 level as a significant undervaluation relative to their global partnerships. If you are using tools like the Fidelity mobile app or Interactive Brokers trading platform to track your technicals, you'll notice that RZLV has been forming a very interesting base. The expectation from the bears was a breakdown toward the $2 mark, but the reality has been a series of higher lows that culminated in today's breakout. This is happening at a time when the broader market is grappling with macroeconomic uncertainty. While many are moving into defensive positions or looking for safety in Fidelity mutual funds or various Fidelity ETFs, a specific pocket of capital is flowing back into aggressive AI software. This is because, unlike the hardware side where you have to worry about supply chains and fabrication costs, the software side is highly scalable with much higher margins once the initial infrastructure is set. People often ask, why buy a volatile small cap when I can just stick to online investing in an individual brokerage account with blue chips? The answer lies in the asymmetric risk-reward profile that RZLV currently offers. We need to talk about the storytelling tension here. The market expects RZLV to struggle with adoption in a crowded digital marketing space. The reality is that their brainpower technology is being integrated at the core of mobile operating systems and retail apps in ways that bypass the traditional search engine model. Imagine you're using your phone and instead of typing into a search bar, you interact with a live environment that understands your intent through image or voice recognition instantly. This isn't just investment help. This is a fundamental shift in how commerce works. While you might be managing your self-investing strategy through a SoFi trading platform or Interactive Brokers account, the companies you are investing in are all fighting for the same thing, the customer's attention. RZLV is building the shortcut to that attention. This is why today's move of over 6% is so significant. It's a sign that the expectation of failure is being met with the reality of technical progress and market penetration. I want to hear from you on this specific point. Comment below how many shares of RZLV you are currently holding, or if you are waiting for a specific price target before you pull the trigger. Also, let me know if you think the shift from search-based commerce to intent-based AI is going to happen faster than the big tech giants can pivot. Looking at the broader landscape of online investing, it's easy to get lost in the noise of the daily tickers. Whether you are checking your Robinhood investments or looking at your Fidelity wealth management reports, the focus is often on the giants. But the reality of the stock market is that the most significant gains often come from the companies that are currently being overlooked by the masses. RZLV fits this profile perfectly. Most people are busy tracking the latest move in Nvidia stock, which is understandable, but they're missing the massive growth potential in the application layer of AI. This is where RZLV operates. They aren't the ones building the engine. They're the ones building the car that everyone will eventually drive. The expectation is that the big players will just build their own versions, but the reality is that RZLV's intellectual property and existing contracts with global telecommunications firms give them a significant head start that is hard to replicate. For those of you who manage your own money through investing sites or a dedicated Interactive Brokers platform, the technical setup here is textbook.
We've seen a consolidation phase that has lasted for weeks, and today's intraday movement is the first real sign of a trend reversal. This isn't just about the stock price, it's about the liquidity. Trading volume has spiked alongside the price, which is a classic indicator of conviction. When you see a stock move up on low volume, you should be skeptical. But when you see it move up like this, with the kind of volume we're seeing on the SoFi investing charts today, you have to take it seriously. It suggests that the expectation of a stagnant price was wrong, and the reality of a new bull leg is starting to take shape. Taking a step back to look at what this company actually does, RZLV is centered around its brain power technology. This suite of tools allows businesses to engage with customers through any mobile device, using various triggers like audio, images, or even geofencing. It's essentially turning the world into a clickable, shoppable interface. Their business model is built on a mix of licensing fees and transaction-based revenue. This is a very powerful combination because it provides both a steady floor of recurring income and a massive ceiling for growth as more users adopt the platform. While older reports showed a company in its early stages of burning cash to build infrastructure, the more recent data points to a focus on commercialization and scaling through massive partners. This is the transition point that savvy investors look for when self-investing. They want to catch the company right as it moves from the proving the tech phase to the making the money phase. The risks, of course, are always present in this sector. The expectation is that high interest rates will continue to put pressure on small-cap growth companies, making it harder to raise capital. The reality, however, is that RZLV has been quite strategic with its capital management. If you are looking through your Fidelity broker or Robinhood app, you'll see that many small caps are diluting shareholders at an alarming rate. RZLV has been much more controlled, which suggests a management team that is focused on long-term value rather than short-term survival. This is the kind of detail that separates a good investment from a gamble. When you are looking for investment help, these are the nuances that matter more than just the daily percentage change. In the future, we should be looking for several key catalysts. First is the announcement of new major retail or telecom partnerships. Each new partnership is a massive reality check for the skeptics who think the technology won't be adopted. Second is the progress toward profitability. As the transaction volume increases, we should see the margins expand significantly. This would likely trigger a massive re-rating of the stock, potentially pushing it well beyond its previous highs. If you are using a SoFi robo-advisor or a Schwab Intelligent portfolio, you might not see RZLV pop up because it doesn't fit the standard algorithmic criteria yet. But for those doing active investing on a trading platform, these are the moments where the gap between expectation and reality creates the most opportunity. To summarize what we've seen today, RZLV is currently proving that it has the momentum to break out of its recent range. The live price of $2.84 and the intraday gain of over 6% are just the surface-level indicators of a much deeper shift in market sentiment. The expectation was that this company would fade into the background as a minor player in the AI space, but the reality is a resilient, technologically advanced firm that is successfully navigating a complex global market. We've seen how the common beliefs about risk and adoption are being challenged by real-world progress and institutional interest. Whether you are holding this in a Robinhood stock trading account, a Fidelity IRA, or an Interactive Brokers account, the story here is one of a narrowing gap between a misunderstood company and a very clear technological necessity. The authority with which RZLV is claiming its space in mobile commerce is something that every serious investor should be watching closely. Keep an eye on those volume bars and the news cycle, because if the reality continues to exceed expectations at this rate, the current price might soon look like a distant memory. Stay focused on the data, ignore the noise of the hype cycles, and remember that in the stock market, the truth eventually always finds its way into the price action.